an 11th hour literally reversal yesterday seen in the markets, with all the risk assets reversing against the dollar and losing still. I mean, some of them managed to close on the positive, but most of them were really affected by the developments between US and China. There is now new escalation on the front following a number of events over the past 2 weeks, actually, that really were not taken into consideration in trades. Now, with coronavirus hopes increasing sentiment over the past few days, I would say sessions, finally we had this single event where the White House now rejects nearly all claims of China, maritime claims in the South Sea, really causing that reversal in literally the 11th hour last night. Euro dollar moved down. It was upbeat during the session because we also expect the ECB and the recovery fund funding to be announced of $750 billion. Dollar against the pound, though. Pound was very weak yesterday because the government announced the new border plans, right? And they don't really seem friendly with the retail and manufacturing sector, because there are going to be VAT changes, there are going to be safety and security declarations, as well as custom checks. Is this another tactic to get the ECB to cave in? Well, this is what traders hope, but for the moment, pound remains weak. We have GDP figures, manufacturing production coming in very soon today. And we're going to touch also the dollar again, as always, because last week we looked at it and it looks like it's moving exactly as we expected. Now, before we get there, though, I want to start with the pound, okay? And the pound, as you well know, well, there is many different scenarios always, but the most favorable ones are the ones that I'm going to explore. 1, 2, 3, 4, and 5. I started seeing these recently as an ending, as a leading diagonal. So it can be either wave 1 or wave A, okay? Until then, of course, we still have, well, we're not even, I mean, we are in the midst of wave 5, which is the last upside move. I'm expecting this move to take us to 128.45 or even to 129.80, okay? Just off the 130. We've done wave 1 and we are moving down for wave 2. We didn't, I think this is going to be an A, B, and a C, okay? We didn't really finish wave A as of yet, it looks like it, okay? We're most likely going to cross within this zone to finish wave A, then B, and then C a little bit lower. And from there, we should higher again for wave 5. Now, in case that is not going to play in, it means that we ended correction up here, and this move to the downside now is a leading diagonal, with this being an ABC, and we start another impulsive move to the downside. For this, look for the 121.18 to provide further clues, okay? Of course, we need to break the 124.36, then the 122.50, and then 121.18, of course, wave B as well for fresh lows. Or, well, we're still moving up, we're still in corrective wave C, but this is an open triangle, okay? This is a very similar, it has a very similar path to the first scenario we saw. Now, on euro dollar, I was expecting this over here to cause the decline. We had another move to the upside with a false break above that level, taking out the 78.6 Fibonacci. We're still in wave X. This for me is a W, X, and Y, okay? And W, X, and Y, W, X, and Y. Many complex patterns here. ABC, ABC, and, well, another ABC perhaps. So I am looking at more downside for the euro dollar, okay? We need to break above this, below this trend line, of course, first, right? That would be below the 113 once again first. Both signals of the RSI indicate that markets are biased to the downside, whereas on the upside, I don't really see much. That the other scenario, though, we're looking is that this is wave 3, okay, on the upside still. So we are going to have Y and then another move to the upside to take out wave 5 instead of that, you know, moving lower. We don't know what is going to be the case, obviously. And the other last scenario is that this is an ABC ended down here. This is wave, well, this is some sort of leading diagonal, which I don't really like the pattern, to be honest, but we can never know. We still expect that to cause a short-term decline anyway. And then we expect markets to break to fresh highs above 114.22. Now on dollar yen, we were expecting this to go down to 61.8 last week. Well, we broke below that. We went to 106.65 or so, and then we start moving up in positive. This 1, 2, 3, 4, we're going to see wave 5. That's going to be 1, then 2, and then 3, multi-structure degree for wave C. Since this wave is impulsive, if 5 waves move, then this is going to be the same. And we're most likely looking at 109.70 or so once again. We see a nice signal here on the RSI with a hidden divergence coming into play. And we want to see now, when I see the break of 107.50, then the high of 108, and then the previous high, which was a false break last time above 108. Okay, the other scenario, of course, could be that, well, we are moving still lower because this is part of wave B still, which means this is A, B, and C. Okay, so 1, 2, 3, 4, 5. So as long as we trade, you see, below that level, 107.38, we could still consider this as a bearish move. And the other scenario, W, X, and Y with A, B, and C. Okay, that means that this is A, B wave is going to be here, right, somewhere to 108 or something, and then C wave down here.